guys, what's up? My name is Jessica. Welcome back to the Sorens Family Channel. So since we are in the tax time of year, and you might have caught TJ's video on how to do your taxes with crypto and Celsius, and so definitely check that video out if you are involved in the crypto side of things and have been following him on that topic. But since we're in the tax flow and we're getting ready to file taxes and get those refunds, I figured it'd be a good chance to talk about taxes. And so I know you're probably thinking, God, this is going to be such a boring video. I don't need to learn about taxes. I don't care about that. But the thing about it is that taxes really do affect every single aspect of our economy, and it really does affect everything about our country in general. People's happiness, people's feeling of success, of achievement, and our freedoms. So I hope that you'll stick around and listen. I'm going to try to make this as simplified as possible, so don't think that I'm going to be using a bunch of big words, because I am still learning and I have really been working hard on trying to understand this one aspect about it, so stay tuned. So the reason I got into this was I was reading Trump's book, Time to Get Tough, Making America Number One Again. And before you think this is a political video, it's not. Whatever you think of Trump, doesn't matter. I just started reading it because he was our president, and I was just trying to get to understand who he was and what he's believed and what he's spoken on in the past, as well as while he was president. I think it's important to know who your leaders are, and have they remained consistent? Have they changed? Why did they change their thoughts, etc.? So I was reading this book, and I'm going to start off by reading a quote from President John F. Kennedy, and then I'll take you to my screen and start going through the details with you. So the quote says, the paradoxical truth is that the tax rates are too high today and tax revenues are too low. And the soundest way to raise revenues in the long run is to cut rates now. So a lot of people probably think it's the opposite, that in order to get more taxes, whether you agree with taxes or not, to get more taxes, it seems like common sense that you need to raise them so that there's more money. But if you understand the full flow of things, you understand that by raising taxes, it actually makes the revenue lower because jobs are lost, so however many people aren't working, they're not having an income, which paying income taxes on. Businesses don't have as many employees, they're not putting as much product out, they're not creating as much, so they're not buying as much materials from other companies that make the materials. Like, it's just one big circle, and it all works together, okay? So let's get into the details. With the recent election, a lot of people were saying, a lot of people were campaigning and talking about wanting to raise taxes on the rich and corporations and the people that have the money. And as citizens, the working people, the ones that work for those businesses and those rich people, it kind of seems normal to agree with that, to think, yeah, they should be taxed more because they're making way more money than we are. Well, I understand that argument, and in some way it does make sense, but let me explain to you why it doesn't actually work out for us in the long run. So if you'll see here on my screen, this is from the Tax Foundation, and it says, who really pays the corporate income tax? So it says, the corporate income tax provides a good example of the importance of tax incidence for tax policy. The corporate tax is popular among voters. After all, corporations are not people. Voters are always eager to have their taxes reduced and have some impersonal corporation pick up the tab. But before deciding what the corporate income tax is, corporate income tax is a good way for the government to raise revenue, we should consider who bears the burden of the corporate tax. This is a difficult question on which economists disagree, but one thing is certain: people pay all taxes. When the government levies a tax on a corporation, the corporation is more like a tax collector than a taxpayer. The burden of the tax ultimately falls on people, the owners, customers, or workers of the corporation. Okay, so that clearly tells you that just because the tax goes to the corporation first does not mean that they take it out of their income or their bank account. That's not how it works. They pass it down to us, and I'm going to explain how they do that in just a minute. It says, many economists believe that workers and customers bear much of the burden of the corporate income tax. To see why, consider an example. Suppose that the U.S. government decides to raise the tax on the income earned by car companies. At first, this tax hurts the owners of the car companies, who receive less profit. But over time, these owners will respond to the tax because producing cars is less profitable. They invest less in building new car factories. Instead, they invest their wealth in other ways. For example, by buying larger houses or by building factories in other industries or other countries. With fewer car factories, the supply of cars declines, as does the demand for auto workers. Thus, a tax on corporations making cars causes the price of cars to rise and the wages of auto workers to fall. So by just that one example, you see that by them having more taxes imposed on their business, they either have to take their business to another country where taxes are less, which happens a lot, or they have to fire people to make up the difference, or they have to raise the prices on their vehicles to account for the difference. So then the people, us, buying the cars, pays that additional price because the taxes they're not going to take out of their pockets because they're trying to run a business and it's all about smart business. So they're going to pass it on in the ways that they can. So I'm also going to explain to you how they can do that also in a second. And just so you know, I'm going to leave all the links to these websites in the description below so that you can go read them for yourself. If you want to dive a little deeper and let it just carry you down the rabbit hole, then you feel free to do that. The corporate income tax shows how dangerous the fly paper theory of tax incidence can be. The corporate income tax is popular in part because it appears to be paid by rich corporations. Yet those who bear the ultimate burden of the tax, the customers and workers of corporations, are often not rich. If the true incidence of the corporate tax were more widely known, this tax might be less popular among voters. So if people really understood what supporting taxing corporations and the rich means, you would be more inclined to vote for the people who are for that and more inclined to vote for the ones that are against it. So that is that article right there, like I said, on Tax Foundation. So let's go into, so these are some terms to help you understand. So if you ever see these terms, hopefully I can help make it more understandable so that you don't feel lost, because I know that taxes can be very intimidating. The language, the dialogue is just, it's very sophisticated. The words are very big and you just don't know what they're talking about. So I had to do this is what took me the most time, is understanding the terminology. So right here you'll see tax incidence, which you saw in that last article said multiple times. Tax incidence is the manner in which the tax burden is divided between buyers and sellers. So it's how they decide to divide it up. Who takes more, who takes less? Is it going to be even or is it going to be offset type thing? The tax incidence depends on the relative price elasticity, which I'm going to explain to you what that means, of supply and demand. When supply is more elastic than demand, buyers bear most of the tax burden. When demand is more elastic than supply, producers bear most of the cost of the tax. Tax revenue is larger the more inelastic the demand and supply are. So let's go to the definitions. So price elasticity measures the responsiveness of the quantity demanded or supplied of a good to a change in its price. So what that means is that depending on how the consumer is going to react or what's going to happen to the seller, it depends on if it's an elastic product or service, or if it's an inelastic service or product. Elastic is demand or supply curves indicate the quantity demanded or supplied responds to the price changes in a greater than proportional manner. Okay, so elastic means, and the example that I'm gonna go through with in a second is like cigarettes. So when you talk about cigarettes, the supply is elastic and the demand is inelastic. So they can charge the taxes that are imposed on the tobacco companies or the cigarette companies onto the consumer because they know there's an addiction there. Same with alcohol, all those things. That because there's an addiction and a dependency on it, they can easily charge the taxes to this consumer because the consumer is going to pay whatever it is because there's an addiction. That's how they can reason that and get away with it, because the consumers aren't going to push back on them because they want the cigarettes. So inelastic is demand or supply curve is one where a given percentage change in price will cause a smaller percentage change in quantity demanded or supplied. Okay, so inelastic means that people are still going to buy the same, or people are still going to supply the same. And elastic is where they're not going to, like consumers aren't going to buy the same. So like cars, if car prices go up or something, then people are probably going to be less inclined to buy new cars as often to change out their car, or people aren't going to be buying as many per household because the price is just too much for them to afford anymore. So that's what price elasticity is. There's elastic and inelastic. And then unitary elastic is just when they're both equal, like nothing changes on either side. Both demand and supply are going to be the same. So there's a little give and take there. So let's go back to this page. Okay, the burden of tax. Depending on the circumstance, the burden of tax can fall more on consumers or on producers. In the case of cigarettes, like I was talking about, for example, demand is inelastic because cigarettes are an addictive substance, and taxes are mainly passed along to consumers in the form of higher prices. The analysis or manner of how the burden of a tax is divided between consumers and producers is called tax incidence. So like I was saying when we read the description above, that's how they decide who to put the tax difference on when the corporations are being taxed more. How do they divide up the extra costs? That's tax incidence. Typically, the incidence or burden of a tax falls both on the consumers and producers of the tax good. But if we want to predict which group will bear most of the burden, all we need to do is examine the elasticity of demand and supply. In the tobacco example above, the tax burden falls on the most inelastic side of the market. If demand is more inelastic than supply, consumers bear most of the tax burden. But if supply is more inelastic than demand, sellers bear most of the tax burden. All right. Think about it this way. When the demand is inelastic, consumers are not very responsive to price changes. So that means that they won't stop buying as much as they buy, that their decisions won't change. And so the same for like bread and milk, like they know these are things that we live on, we depend on. So those would be other products that that the demand side is inelastic on. And the quantity demanded remains relatively constant when the tax is introduced. In the case of smoking, the demand is inelastic because consumers are addicted to the product. The seller can then pass the tax burden along to consumers in the form of higher prices without much of a decline in the equilibrium quantity. All right. When the tax is introduced in a market with an inelastic supply, such as, for example, beachfront hotels, sellers have no choice but to accept lower prices for their business. Taxes do not greatly affect the equilibrium quantity. Okay, so they still have the same amount of condos and stuff to rent out or sell, so that the quantity doesn't change. So the tax burden in this case is on the sellers. If the supply were elastic and sellers had the possibility of reorganizing their business to avoid supplying the tax good, the tax burden on the sellers would be much smaller and the tax would result in a much lower quantity sold instead of lower prices received. All right, so let's look at this graph down here. Okay, so this side here is when the demand is elastic and the supply is inelastic. Okay, so this would be like the hotel example. So as you can see, this PP represents the owner, PC represents the consumer, and PE is the new price. So this gap between the owner and the tax is bigger because the seller has to eat the cost of those extra taxes in a situation where the supply is inelastic. And then you can see the gap between PE and PC is the small amount of the taxes that the consumer has to absorb. So yes, the rental of the condo might go up for us too, but they're going to up it for us. So this is like the original price, the PE, and this is how the PC is what we pay. So we pay just a little bit, a fraction more, but they are eating the cost of a ton more, this gap right here. And then this would be in like the example of the cigarettes. Okay, so PP is still the owner, PC is the consumer, and the PE is the original price. So as you can see, they're eating way less cost and they charged us the difference. So we are actually the ones paying the higher portion of that increased tax. So, I mean, yes, you could say, you could argue, like that'll probably balance out. Like, I don't buy everything that the higher taxes on the corporations are going to do, but it's still going to affect the economy. It could affect your job. It could affect your family's jobs. It could affect the community, because like communities go down when factories or businesses shut down. So it really does, like, and then it grows. So it might take time to see the effects of it, but it will get there. So this is one of the reasons why we just have to be educated and understand how this stuff works. Yes, I know it is kind of boring. I actually found this kind of exciting because it was starting to connect things in my head that I felt were a little overwhelming for a while. So, but it can be kind of exciting when you start to understand things, so that when you're looking at that ballot, voting on things, or listening to someone speaking on the news or whatever about this stuff, instead of it going over your head, like you're processing some of it, and some of it might still be misunderstood, but you're understanding parts of it enough, like the more you learn, to where you're like, okay, I understand what they're talking about. And then when they put their own opinion or their own viewpoint in it, you can decide if that viewpoint is correct or if it's the wrong viewpoint, or if they're trying to spin it in a way that sounds good, but it's not actually good because it's going to affect you too. Then it really does help the entire society the more that we know this stuff. So let's go to, how do taxes affect the economy in the short run? So kind of still the same points, it's just kind of said in a different way. So I just wanted to show you all these things that I found and read that helped me understand it more clearly. And like I said, I'm going to put the links in for you so you can go read them over and over again if you want to try to understand a little more, because that's what I had to do. So the question is, how do taxes affect the economy in the short run? The answer is primarily through their impact on demand. Tax cuts boost demand by increasing disposable income and by encouraging businesses to hire and invest more. Tax increases do the reverse. These demand effects can be substantial when the economy is weak, but smaller when it's operating near capacity. So before I move on reading the rest of this a little bit, and this article is really long, so if you want to read the rest of it, you can. I'm just giving you little inserts of it. I wanted to read something that President Ronald Reagan said. This is also in Trump's book. He puts a lot of quotes and a lot of history into this book as well. And this book talks way more about than just taxes. I do highly recommend that you read this if you want to get... He does a good job at giving a well-rounded view of the different things that affect our country, like agreements and treaties and orders and laws and stuff. And then, of course, taxes. He gives a well-rounded view of it, but not too much detail. It's just enough to like wet your throat and to give you a good view on it. But if you want to go in a little deeper, like I did on the taxes part of it, then you can. And with the information that he gives you a good starting place on what to look for, like what words to look up, which leads you to more and more. So the quote is, "The more government takes in taxes, the less incentive people have to work. What coal miner or assembly line worker jumps at the offer of overtime when he knows Uncle Sam is going to take 60% or more of his extra pay? Any system that penalizes success and accomplishment is wrong. Any system that discourages work, discourages productivity, discourages economic progress is wrong. If, on the other hand, you reduce tax rates and allow people to spend or save more of what they earn, they'll be more industrious. They'll have more incentive to work hard, and money they earn will add fuel to the great economic machine that energizes our national progress. The result, more prosperity for all and more revenue for government." So like I said in the beginning, the more people are making, the more people that are working. So if 10,000 more people are working, then that's 10,000 people's income tax that you're getting. Versus if those 10,000 people aren't working, then you're getting no income tax from those 10,000 people. Now, income tax is a whole other topic on whether you agree with it or not. It's part of our world. It really shouldn't be. It was intended not to be. That's one of the reasons why this country was founded, but because they were against the tax, unlawful tax. And so, but it is part of it. And I think the best thing is that unless it's eradicated, the best thing is for it to just be, for taxes to be cut so that more money is going into people's pockets, so that people are feeling more generous to give to charities, to give to missions, to give to their church, to give to their organizations, more money to save so that they're not reliant on the government for their future success, more money to invest to create better future success, like me and TJ try to do with crypto and all the things that we talk about on his side of the channel. So here's another thing that he put. Steve Forbes said that President Reagan, before he instituted the Reagan tax cuts, the richest 1% of America paid 18% of all federal income taxes. The top marginal rates that went from a suffocating 70% down to 28%. And what was the result? Their portion of the national tax bill actually doubled. So when the tax rates were cut, the richest 1%, their tax bill actually doubled to 36% of the federal income taxes and produced 23% of the nation's income. So that right there says that when the corporations aren't being heavily taxed, which gives them the pressure to pass it on to us, to eat portions of the cost, to have to fire people for a time while they try to figure out a way to deal with it and stuff, they have to let people go, they have to shut business down, they have to stop producing as much, whatever it may be, they're not contributing to the economy as much anymore. So the overall national income goes down, jobs go down, etc. It's like a compounding effect, and TJ has talked about that a lot, compounding effects. One of the last things I want to read before I end the video is another thing by President Reagan. Some say shift the tax burden to business and industry, but businesses doesn't pay taxes. Oh, don't get the wrong idea. Business is being taxed, so much so that we're being priced out of the world market. But business must pass its costs of operations, and that includes taxes, onto the customer in the price of the product. Only people pay taxes, all the taxes. Government just uses business in a kind of sneaky way to help collect the taxes. They're hidden in the price. We aren't aware of how much tax we actually pay. So when they tax the corporations, they not only do the corporations build that extra tax that are charged to them just for being in the rich class, not only do they charge it as part of the price of the product. So when you see like milk go up or the price of gas go up, there might be other factors into it, but it's probably also because taxes are fluctuating. So when you see that the price go up, you're paying tax to that corporation that they are going to then separate off that extra tax amount and their normal income or whatever, and they're going to send that portion to the government. And then on top of buying that product with that built-in tax, you're paying sales tax on top of it by buying that product. So you're not only paying built-in tax, but you're paying sales tax. So we are being heavily taxed, and a lot of it is hidden and things like that. So we need to understand what we're voting for. It is so crucial. So I'm going to leave these two links in the description as well. You can go and read them yourself. This is talking about like the price of gas example, and how basically whether the gas station owner sells the gas for $2 a gallon and pays 20 cents in tax, or only charges $1.80 per gallon and doesn't pay any tax, the owner still makes the same amount of money. So the owner doesn't care. Most of the time, the owners are not going to care that taxes go up because they know they're just going to pass it on to the consumer, which in reality, they're a consumer too. Even though the person owns the gas station, they're still having to buy gas. So it does go on to them in extension as a normal citizen, not as a business owner, corporation, whatever. But still, like for a business mindset, it doesn't matter to them. They're still making the same whether they get taxed or whether they don't get taxed, because either way you're paying it or nobody's paying it because it doesn't exist. So this article is pretty good. And then this one is just kind of like a funny story. If an alien from another planet was exploring other civilizations and wanted to know what our tax system is and what that means and how it works, this is kind of like a funny, short, quick to the point example of all the different ways that taxes operate in different realms of our country. So I'll leave those in the description. You can go read those if you want to. So I am one of the people that don't support taxing the rich because I'm not rich. So I'm not one of those people. I'm still like middle class type living. But I don't support it because I think that the people who have the businesses and corporations, they have worked really hard to get to where they are. Now, whether you want to say they did it in honest ways or no, like lack of integrity ways, that's per case scenario. So I have to think big picture. They worked really hard to get where they are. They are employing a lot of people to create jobs, and they are assuming a lot of risk in being a business and making that kind of money. And it's a big thing that they have to assume the risk of and assume responsibility for. They are in charge of providing who knows how many jobs, so that's a big pressure on them. So I fully support that. They make a lot of money. Yeah, you can be jealous of it, but the beauty of it is that the country we live in gives us all equal opportunity to fight for something like that. You might not get as high as the richest person in the world, but you can achieve some great success, and we have the freedoms and ability to do that. And taxes is one thing that prevents a lot of people from jumping into business, because when they get into it, they realize they would never survive. And so I am for no taxes. Definitely not taxing the rich. I think that is unfair. So yes, in summary, corporations, they do get taxed. So if we support corporations getting taxed more just because they're rich and we're jealous or think that they owe it to us as a country or whatever the thought may be, I've heard all kinds. They might get taxed, but they're passing it to you. So in the end, we pay for it. They don't. So just keep that in mind as you vote, study, listen, interpret, etc. The last thing I want to leave you with, the last quote, is from President Gerald Ford, and then we will end the video. A government big enough to give you everything you want is a government big enough to take from you everything you have. So that quote right there really kind of made me sit back and really want to look into it, because I definitely agree with that, and I've seen that. The more the government is providing for us, the more we lose. So anyways, guys, I hope that this helped you just to get a basic beginning. Maybe not so basic in your head. Maybe that was like, wow, that was so complicated to take in. But it is a good starting point, and if you never learn anything else about taxes, then I feel like this is a big one that is always something that comes into something to vote for, policy that they're trying to pass. Taxes are always a big one because they're always looking for more money. So we need to understand, why are they looking for that money? What are they actually going to do with it? And who is actually paying the bill? So anyways, I love you guys. Have a great day. If you have any questions, you can definitely leave them in the comments below, and I would love to try to help you understand more or find out some more details for you to research and help you along the journey. I think that education is super important, and sometimes, you have to seek it on your own, which can be the most fun anyway, when people aren't demanding you to find it, when it's more like inspiration is carrying you. So anyways, guys, have a great day. Like and subscribe to our channel, and we'll see you in the next one.